The first question says, the gross profit is equal to which of the following? We said gross profit is your sales divided minus your cost of sales, or your revenue minus cost of sales. Operating profit plus revenue, no. Revenue minus cost of sales, yes. Revenue minus operating, no. Revenue plus cost, no. So the answer is B. Question 2. It said, a business is likely to have sufficient working capital if the current ratio lies between which of the following? So look at this point here. When your current ratio lies between 0 and 1, it means your current liability is more than your current asset. That means the value of your current liability is more than the value of your current asset. Or they are the same. Do you get the point?
Yes.
If it is 1, it means your current liability is the same as your current asset. Do you get the point?
Yeah.
You don't get it?
Yes.
When your current, you said current ratio is current assets divided by current liabilities. So if your current ratio, let's say your current ratio, your current asset is 3, your current liability is 4. Just a figure. 3 divided by 4 will give you what? What's the value it's going to give you? 0 point something. Yes, what?
0.5.
It's 0 point something. Sit down first, please. It's going to give you 0 point something. So it lies between 0 and. So it means the business doesn't have enough working capital because it has a lot of debts. That means it has maybe a lot of overdraft. But if your current asset is 4 and this is 3, it will be between 1.5 and 2. Your current asset must exceed your current liability. That is the point. Do you get it?
Yes.
The difference are not that much, but your current asset must exceed your current liability. That is the only time you have enough working capital. Is it clear now?
Yes.
Alright, so the answer is C. Then go on. Question 3. It said, if revenue is 500,000 and operating profit is 100,000, the operating profit margin will be, what is operating profit margin? We said operating profit margin is operating profit
over revenue.
Yeah, okay. Profit divided by revenue multiplied by 100. So what's our operating profit? Our operating profit.
That's
1,000, right?
100,000.
500,000.
Multiplied by 100.
Which one is 100?
So 5 here, 20%.
20%.
So it's A. Clear, right? And the last one said the ROS is given by which formula? We said ROS, that's the return on capital employed, is your operating or your gross profit margin minus your expenses, office or administrative expenses or operating expenses divided by the capital employed. Multiplied by the sum. We have gross profit. No, it's not about gross profit. Yeah, operating profit divided by capital employed multiplied by 100. So the answer is
B.
is it clear now?
Yeah.